Everybody needs insurance at some point in their lives, but you've got to understand that the entire industry is a total money-making machine, and it is way easy to get ripped off if you don't follow a few simple rules. So in this video, I'm covering the 3 things that you need to know about insurance so that you don't get ripped off and you can be a little bit smarter about it so that you can actually save some money. And all of these strategies apply to all the different types of insurance like life, health, and auto insurance. So definitely pay attention and hopefully you'll learn something new. Now I'll warn you right now that I'm not a professional when it comes to insurance, so definitely seek one out if you're looking for that type of information. But I do know that basic math can usually cure a lot of these problems, and that's what I'm into, so this is the information that I'm going to share with you guys. And if you just found this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So definitely subscribe if you guys are into that type of content, but now let's talk about the things that you absolutely need to know about your insurance. The first thing that you need to know about insurance is that you should always shop around with a whole bunch of different companies before you go with any type of insurance. And then also don't stay with the same company forever, because a lot of the time you're going to find better deals elsewhere. I say this because statistically you will stay with the same company for years, because once you get your automatic payments set up, you're probably not going to switch companies because that's just how it is. Insurance companies make everything super complicated to understand, so naturally we don't even want to switch companies just because it's a lot easier in that sense. But I would recommend that every couple years you look into a bunch of different insurance companies and check their premiums and their coverage just to see if maybe you can get some better value out of another company. Plus, a lot of the time you'll find that when you threaten to cancel your policy, they'll actually come back with a better rate because they're trying to negotiate you to stay on board with them, and this all happened just because you're looking at different companies. So if you really do love your insurance company and you never want to leave them, then I would at least do this tactic just to make sure that your rates don't inflate over time. The goal here is to get the most coverage that you possibly can from your insurance while at the same time paying the lowest premium possible, and that's pretty much all that I would ever worry about. And then keep in mind that a lot of the insurance companies that you see on TV are actually some of the most expensive ones out there because they have to pay for all that marketing, and they have a bunch of gimmicky features that you also have to pay for as well. You just need to do a little bit of research, and I guarantee you can find a lot of insurance companies out there that actually have good prices and good coverage. Now, the second thing you need to know about your insurance is how your deductibles can actually affect your monthly premiums, and I really want you to pay attention here because I think I can save you some money. So basically, the way your deductible works is that whenever you have to make a claim with your insurance, you're going to have to pay your deductible first before they actually end up paying out any money. And this is all pretty simple, but the problem is when you have a low deductible, you're going to have higher monthly premiums, and this is a problem because you usually don't need to use your insurance. Because the way it works is that if you have a $500 deductible on your car and then you make a claim, you're just going to have to pay at least $500 before they're going to pay anything out, and then your monthly premium, I would bet, is probably around $75 a month. But if you change your deductible to $1,000, then you are going to have to pay $1,000 if you need to make a claim. But the thing is that your monthly premium is going to go down to probably $55 a month, and statistically that's going to save you a lot more money over time. So with this math, you can tell that in 2 years you're going to make up $480, which is almost the difference in that deductible. So as long as you're not getting in a wreck in 2 years or so, then it's actually a better value for you. But if for some reason you're the type of person that gets in a wreck every 6 months or so, then I would definitely go with the lowest deductible possible because you're probably going to end up needing it, and that's going to save you more money. But overall, if you look at the stats, you're going to find that statistically you're probably not going to get in a car wreck, and that's why I'm always going to recommend going with the higher deductible and keeping the lower premiums because it's always going to save you more money in the long run. And another thing here is that if you actually have an emergency fund saved up, then this is what you should be using for your deductible, and you should always keep your premiums low just because you actually have an emergency fund to cover the problem if something happens. And then also keep in mind that no matter what your deductible is, you're probably not going to make a claim with your insurance unless you absolutely have to, because the problem here is that when you make a claim, generally your premiums are going to go up a little bit, and that's something that we all try to avoid. So a lot of the times, unless you're getting into a big accident, this isn't something that you need to worry about. Now, if you do end up calling your insurance provider and raising your deductible, but your premiums only go down about $1 a month, then I would definitely say that this probably isn't a good thing to do because it's going to take way too long for that money to actually make sense as far as value goes. So if that does end up happening, then I would just stick with the same deductible that you already have, or I would just look into going with a different insurance company to find something better. And then the third thing you need to know is that a lot of different types of insurance out there are a total ripoff. So what I want you to do in most cases is just some basic research and some basic math, and you can easily find out if it's going to be a good value for you or not. It's kind of like when you go to Best Buy and you get a new laptop for only $300, but then they offer you an extended warranty for $100 as insurance, but that's really just a total ripoff because that's a third of the cost of the laptop just for something that's probably not going to happen. So that right there is a prime example of insurance that I think is a total ripoff because it's just not worth spending that much money to cover something that you can actually replace yourself. Because at the end of the day, I feel like you should only be getting insurance if you can't replace the item or repair it on your own. Now take for example whole life insurance, which is basically a lifelong life insurance policy with a built-in savings account as well. In my opinion, I don't think it's worth it, and I'm going to give you two examples right here that I think you will agree with. The first reason is just the fact that when you're older, you probably don't need life insurance anymore because at that point, you're going to have your assets all paid off, and if something did happen, your family should be safe at that point in your life. And that's actually one of the big problems I have with whole life insurance because you're actually paying more in your premiums just to have a giant life insurance policy when in reality you don't need it for your entire life. You only need it for 10 or 20 years when you're young, when you're actually having to pay off those assets, and if something happened to your family you couldn't pay them off. But when you're older, you're not going to have that problem. And honestly, in some situations, it does make sense to have a life insurance policy when you're older, but I feel like for the most part, you should actually have your debts paid off by that time in your life. And like I said earlier, the only reason that you need insurance is to cover something financially that you can't actually cover on your own if something were to happen to it. Now, the other stupid thing about whole life insurance, in my opinion, is that a lot of your premiums are actually going into an investment account, which is something that I don't think that you should be paying for on top of the premiums on your life insurance. I mean, it might sound like a good idea on the outside to have an investment account inside your life insurance policy, but the problem with it is that it's a total ripoff because there's a ton of hidden fees in there that you have to pay, and you're actually going to end up with an investment that's paying out less than the S&P 500 index, which you can just get on the stock market. I mean, the average return from the S&P 500 index all the way back to 1923 has averaged 10% if you're not including inflation. So the thing is that that's actually a far better return than you could ever get from your whole life insurance policy. And that's why I don't agree that it's a good idea to be spending your extra money on a stupid policy when you could just invest it on your own. So if it were me, I'd just take the extra money that you would be spending on your premiums, but instead I would invest that in the stock market on my own terms so that I could get a better return. Because just remember that any extra money that you're paying on your monthly premiums is money that you could be using as an investment or just something else in your life rather than insurance. Just do some basic math and some basic research whenever you're looking for any type of insurance, because a lot of the time you're going to find out if it's worth it or not just by doing those two things. There are a ton of big commissions in the insurance industry, and that's why they always want you to buy all the stupid fancy policies and the add-ons, but in reality, you just need to do your homework and your research so that you can get the best value for the insurance policies that are best for you. Now, once again, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So definitely subscribe if you guys are into that type of content. But for now, just remember that insurance is a big deal, but I don't want you spending money on something that you don't actually need.